Welcome back, traders, to Market Analysis 101. All right, let's do what we do best here. Today we're going to do a brief review of the S&P 500. We're also going to look at gold briefly. And in addition, as a bonus, we're going to add the Nasdaq to our review. First of all, I would like to draw your attention here to the S&P 500. We're looking at a daily session of the S&P 500. And what did we get? We didn't get much. We got a small little candle here in this area. However, if you drill down to the intraday level, you're going to see that what we were talking about on the weekly special and what we covered on the weekly special was three scenarios. We're looking at a bullish scenario of breaking out of this area right here, which was the top, and blowing right through it. We did not. We got rejected. So that brings us to the following two scenarios that we have now in play. And the first bearish scenario or corrective scenario was making a move down, which we started that move down, and then bouncing off of this support right here so that we could continue our merry way up. So that is still a strong possibility that we have that we will need to consider as we move forward. However, the following scenario that we had also in play was to blow right through this support and make it to this target zone, which is the 3008 area. And if we blow through that support as well, then we would have a target of 2875. The reason that I color coded this green is because this is an important support line, because this would be the following support and we would consider some sort of consolidation or a pivot in this area. So we're going to have to keep an eye on that if we want to take some sort of position in that area. Now, one additional thing that we need to keep in mind as well, if we break out of this area, which is the 3154 area, we're going to enter into another danger zone, which is this yellow highlighted box. So even if we get past the 3154 area, this yellow area would be an area of contention. This area would be sort of our danger zone. Getting across this yellow area will get us into the end zone, and that end zone means that we would then become bullish again. If we don't, then ultimately, again, we pivot back to our original two scenarios, corrective scenarios, which is either coming down here, then bouncing right back out, or going lower and looking for that 3008 area and also that 2875 zone as well. Now let's look at gold. One of the things that we were identifying in the weekend special is looking at this pattern, which was a reverse head and shoulders. And so ultimately what we said is this is the people's safe haven. It might not be yours, but it is a safe haven for other investors. And we are starting to see this tick up, and we're starting to see sort of a breakout moment. Again, one of the things that we need to take into consideration is the MACD. We already have a crossover in the MACD. We're starting to get some momentum. And also on the RSI, we're starting to get some momentum in that area as well. So we got to keep an eye on this, because ultimately this becomes an indicator in addition to the VIX to determine where the S&P 500 is going. So let's move on to the Nasdaq now. So today we're doing the Nasdaq. I'm doing that as a bonus. One of my friends asked me to do the Nasdaq. It's not that I got anything against the Nasdaq. I've been focusing on the S&P because I think that's helpful for the general public. But the Nasdaq has been a leading indicator, mainly because it's been telling us where the market is going. And so one of the things that we got today on the Nasdaq was this reversal candle, or in other words, this inverted hammer. And it doesn't mean that the market will turn at this point. Again, the market has proven a lot of people wrong. The Fed has proven a lot of people wrong. So having said that, we do have a inverted hammer. We do have a reversal candle. And so possibly there's a strong possibility that we might be looking at a downturn on the Nasdaq. The reason that you see these two lines here, these were targets that I had previously. And one of the targets that we had in our chat room was 10,300. And so we hit that 10,300. We reversed from that 10,300 area. I think we went up to 306 as a high. We've reversed on that point, and so I took some risk off of the table. I sold some of my tech stocks, mainly because we don't have to be greedy. And so that's one of the other things that I think is an important habit. Now that we're talking about trading habits, learning to gauge when you're getting too greedy and when you start seeing the market become very greedy. It's very important to identify those moments because you don't want to be the person holding the bag in the end. And so it is very possible that we are starting to see a reversal on the Nasdaq. Now, we don't know how low it's going to go, but we have been expecting some sort of correction. And so this might be that moment for the Nasdaq. Now, again, looking at the MACD, a little bit tight, but it seems like we're having some sort of rounded crossover. And then also on the RSI, we've already got into the overbought area. We came down and now we're going back to it. So there might be some divergence in that area. And if we start seeing that, then that also helps our corrective case. So we got to keep an eye on that. Again, this also will inform how people react to the S&Ps. It almost seems like we have the writing on the wall. Now, what we got to be careful is not to be biased with what other people are saying. We got to be careful to look at the charts and to find strong confirmations so that then we could ride the train to its final destination. Now back to the S&P, it's worth mentioning that at this moment in the futures, the S&P is moving a little bit higher, but we still haven't crossed this 3154 area. So the corrective scenario is still on the table. That said, this is the market wrap up. Stay safe and stay profitable. See you guys.